How to minimize your risk in trading by using the Simple Strategy Diversification Strategy. Hello guys, and welcome to this channel. This is Don Ragudi here. If you haven't subscribed this channel, please make sure to subscribe this channel and ring the notification bell, because we have lots of videos to share with you, some free tutorials under this channel about forex trading and strategies. Okay, come back to you guys. Here is our topic today. This video is about how to minimize your risk in trading by using diversification strategy. Okay, so diversification strategy is the best strategy to minimize your risk. So you can have more pairs that to play in your account, so that you can minimize the risk. Let's say you're putting one currency pair, euro US dollar, and you're putting lots of lot size in that particular USD. Once the moment that the market is on opposite side, it will be disaster for your account, right? If you say you still maintain with a risk management, your minimum, let's say your maximum risk is 2% to 5% of your account, so you're still good. But what if we can do that with a minimum risk by diversifying to different currency pairs and leverage it? Okay, so let's say you want to trade one lot. You decided to trade one lot based on your risk money management calculation. Let's say 0.1 lot size, it's about maybe about 2% from your account. Let's say just this is just for example. So you can have that particular calculation, right? So now you can diversify your risk by dividing your trades with 10 different pairs of trades. And every trades you can open it with a 0.01 lot size each. Before that is you decided it with 1.1 lot size, which means is $1 each pip. But you can diversify it with different currency pairs and divide it by 10. So means you will divide it by 0.01 each trade currency, right? Okay, how to do that? So one more thing, question is how to do it with diversification. Okay, let's do math. Okay, let's say each trade 0.1 lot, it's about $1 per pip. Maybe this is about based on your account. So it's up to you. It depends on how much account you have available and how much capital you're available in your account. So this is just for example. Let's say you decided that 0.1 lot is about 2% or 5% in my account. Alright, so now each $1 pip is equivalent to $1. So right here it's equivalent to $1, each equivalent to in 1 pips, right? So your risk management is, maybe you're decided is let's say if I have 100 pips based on my calculation, multiply by $1, so I will be losing 100 USD if that particular trading or that particular pairs that I'm using. Let's say your US dollar, you are possible you lose 100 USD from your account. Alright, okay, we will do like this. Okay, by dividing it with 10 pairs, so means you need to have 10 types of currency pairs, right? So by dividing it with the 10 pairs, 10 currency pairs means each trade will be 0.01 lot. So 0.01 lot means 0.10 cent dollar per pips, right? So that's the equivalent of it depends on your broker, right? If you say if your broker has maybe 4 pairs, that 0.01 is 0.01. All right, it depends on your broker. All right, but if your broker having 5 digits, so each pip normally is 10 cents per pips. Each pips for 0.01 lots here. If your 0.01 lots is equivalent to 10 cents per dollar, right? So 10 cents dollar per pips. Okay, all right. So now your risk amount each trade is 100 pips. Just let's say it's 100 pips each currency pairs you're possible to trade. So multiply by 10 cents here is equivalent to 10 USD. So now you're dividing the risk on that particular, let's say in one currency pairs, Euro USD, Now you're, instead of you're losing, possible you're losing risk is a $100, now you're losing only is $10, right? So that's because we already divide by each maybe 10 pairs, like Euro USD, Australian US dollar, GDP USD, or USD Swiss franc. Is up to you. We have few types of currency pairs, a lot of currency pairs in the market, in your broker, that you can choose on. All right. So next, so what is the rewards? Okay, the rewards will be by having 100 pips risk or lower than this, your TP or take profit settings must be in a higher than your settings, your SL settings or stop loss settings. Okay, like maybe 1.5 or times 2. This is your settings on your take profit, right? From the amount of the value of your SL or your risk. All right. So okay, let's say now you have traded 10 pips, 10 currency pairs. All right. So you have traded 10 currency pairs. So your rewards for that particular, let's say you enter the trade to 10 particular pairs. Now the result is the worst situation. Okay, the worst situation. So let's say after the result was 6/4, so means, so you have losing 6 pairs. All right, part of the about 10 pairs of your trade is 6 pairs loss, or it hits the tip, your SL, it hits your SL, right? So 4 pairs is on win pairs, right? So it hits the TP. Okay, remember that your TP maybe in times 2, right? Times 2 from your SL, right? So let's say your SL is 100 pips and your TP is in times 2, maybe 200 or 150. It depends, right? Okay, the calculation, here's the calculation here. What is the average? Okay, let's say if the worst situation of 6/4 means about 40% winning and 60% loss, right? So the calculation is 6 pairs loss. Every pairs that you are losing is $10. So multiply by 6, you have a $60 loss, right? On that worst situation, right? So in the winning situation here, the 4 pairs win, it hits your TP or take profit is about $20 each pair, right? So $20 you have $80 USD win for that particular pair, right? For the 4 pairs, and you are losing 66 pairs, and you're losing 4 pairs, right? So you do the calculation. So your winning is $80 and minus your losing, because in the market we cannot predict 100%. There is no such thing as 100% in the market. In the market trading, there's no 100%, because if there is 100%, then he must be a billionaire, right? But he doesn't have that. So most probably is we are doing prediction, right? So the worst situation, this is the what's are we using the worst situation, 60/40, right? So let's say your calculation here is your winning trade is 4 pairs, your winning is $80. You minus out with your losses, whereby 6 pairs is about $60 on based on our calculation. You have 60, so you're still profiting $60 on that group of pairs, right? So maybe this one it takes about 3 days trading, right? So your 2 days or 3 days, it depends, right? It depends on your account as well. So that is $20 on your account. So it depends on how big is your account and how big is your amount. So this is just for example, right? Okay, now, so the reward situation. Okay, what if 50-50? So just now is about 60/40. So 60%, 6/4, 60% lose and 40% win. What if a better situation, still a better situation of 50-50? So 50% win and 50% loss. Okay, so from 5 pairs loss, it hits your SL, and then 5 pairs win is about hitting your TP as well, right? So because you have 10 pairs, right? So the calculation, you say 5 pairs loss, you have times multiply by $10, you are losing $50 from your based on your risk management, right? So now, how about your 50 pair, another 5 pairs, which is winning situation, which is times 2 from from your losses, right? Okay, so the winning situation is you're earning multiply by 20 USD, so each, so is equivalent to 100 USD win if that is multiplied by 2, right? So your winning will be 100 minus your 50 losses is equivalent to 50 US dollar. So this is a better, right? So this is a 50-50 cases, right? So in this situation, there is a better way, because you know why? You have 10 pairs, right? So from the 10 pairs there, I don't think so it is cause all losses, right? So it could be not, because you have doing your analysis as well, and maybe you're doing your indicators to show you to show the better entry and all that, right? So it could be, it doesn't hit your 100%, or all your trades has been closed by all losses, right? So from the 10 pairs, so from our situation here with a 60% and 40% win, 60% loss and 40% win, is you're still earning, right? So that's how to do it, right? Okay, tools to fast your analysis. So there's questions here, how to do that particular analysis, because since you have 10 pairs, right? So you have 10 pairs, it's quite a lot of pairs that you need to analyze that particular currency pairs, right? So there's to do this, you must have tools to fast your analysis, right? So first, you must have a prepared easy or plotting tools indicator. So I would suggest that you must have an indicator to show you where's the entry and your proper entry, and where's your stop loss, and where's your take profit. So from another video, we have another video that will show you on how this indicator, I'm sharing the indicator whereby you can do fast plotting on this particular strategy, right? Okay, so next you can have first is you can have a proper you can have an indicator. The advantage is an age for your indicator to do analysis fast, right? So the second thing is you can use robot trading software. So let's say your robot trading software, you are risking there about 2% from your account, right? And then in one pairs, so you can have multiple pairs, like maybe you multiply it by 10, so by dividing it different lot size, smaller lot size with multiple pairs, so you have an edge that the better winning probability, right? So that is a good thing there. So I hope you learn on this strategy. You can have 10 or you can have 5, so it's up to you. So from our example just now is 100 pips, so maybe you can lower that to 5 pips. It depends on because it depends on your account size, right? So it's up to you. You can have lesser pairs and a better bigger lot size a bit, right? So it depends on you, right? So I hope you learn in this particular trading strategy. Actually, this is a very famous strategy that in trading, whereby you can diversify most of this trading. So thank you guys, and I hope you get it and you understand. So if you have comments, you can comments down below, and make sure to subscribe this channel. We still have a lot of videos that you can learn up, right? And then one more thing is you can go through more of our videos that we are sharing, mostly the strategies on how to a better strategy and how to win in the market.